So, December 2nd, which is the day after a big freaking day for us, since we talk about these things all the time. What is that event? Well, that was the Fed saying we're going to stop quantitative tightening. Quantitative tightening started right back in here. Let's go ahead and show you the chart so you can see what we're talking about here. Start right back in here. So in October of 2021, started quantitative tightening, meaning the Fed was not buying into the mortgage-backed securities or treasuries or anything as much as they were before. They were trying to get the runoff of their balance sheet, get some of the stuff off their sheet, get some of the things out of there. And so by doing that, look what ended up happening. A lot of this just capital fleeing the market over that period of time. So that was literally 1 year. And 1 year we dropped. What is that? Let's take a look and see. That ends up being somewhere in the range of, because there's so much crap here on my screen, 1,500 basis points, guys. That is significant. That is significant. 100 basis points is 1 point in cost. That's 15 points in cost swing is what we're looking at here because of the quantitative tightening. So the Fed, they officially announced they're going to end that as of yesterday. So that is done. That means they're going to stop letting treasuries and mortgage-backed securities mature and then kind of vanish from their holdings. They're going to retain. But also what's interesting is the Fed also said that they are seeking to have a treasury-only balance sheet. What does that mean? We're looking at the T-bills, not necessarily MBSs. So everybody's going to be following the treasuries and say, hey, look what happened in the 10-year. But it's not going to coincide with what happens with interest rates. There's going to be a difference there unless they start to invest back in mortgage-backed securities. So if they invest back in mortgage-backed securities, we're going to see these levels above here. So where I have shown where it references that Fed rate cut, we got this line right here, kind of a white line. That right there represents the end of the day trading from the day they announced quantitative easing back in 2008, November 2008. So we've seen above that a couple times, but we haven't spent any real heavy time above it, meaning that's where the value of the security is, or that's as exposed anybody wants to be in mortgages or MBSs, if you will, without some sort of enormous amount of capital coming from another source that's being backed by somebody who can really lose money and not give a shit, which is the federal government. So that being the case, if they don't go into MBS, but go treasury heavy, we may not see interest rates go below where we are. We may see go up here. It's possible. What is this? This represents the value of this security, the 5.5, the date they started quantitative easing in 2009, which is January 2nd. So that being the case, we may never see interest rates get lower than that. But if they do, if for some reason the Fed decides that they want to pour more into MBSs, it seems to be, they say it's a risky security for them to be into. It's not optimum for monetary policy transmission is what they say. But if they decide to, we're going to see a massive jump in the price of housing. So if you're sitting here waiting for that to happen, one, it may not. And if it does, you're going to lose out on the valuation of the house. Just in that, if we did this one thing, we jumped right here, just jumping up to this point, you could see just right here, from here to here, you could see potentially 5, 6, 8% increase in the house value, maybe 10% in the price of the house. If you bought that home and just sat for that to happen, you could have the valuation of that property to increase prices, pay for the refinance. But if you waited till then to buy it, you're going to pay the higher price of whatever the rate is. So you're losing. So right now, I would get the deal. Get the deal, focus on the deal, get the assets. We're in a problem in our currency, guys, with all the stuff they're talking about, the quantitative easing, again, whether it goes into mortgages or not, just goes into treasuries, that's going to devalue the US dollar. What's that mean? What's sitting in your pocket right now is worth a hell of a lot less. You will not be able to buy the assets that you need to be able to survive later. Get the assets now. Hard assets today. Get those assets. If you don't understand what I mean, call me. info@aaronchapman.com. Email me at info@aaronchapman.com. Let's talk about that. What am I doing? Where am I putting my capital? What assets do we have it in? Because it's definitely not going to be in cash. Cash is a rough asset to be in right now. It's going to get pretty ugly over the coming years. That's my opinion, but that's just based upon stuff that I'm seeing. Again, Aaron Chapman opinion. I'm trying to get fear going on here. I'm trying to warn you that you want to get yourself in some assets, real estate, precious metals, other things, assets that will have value when the currency ourself does not. So we definitely want to talk about that. We want to talk about how to preserve that capital for your family, how to set up your entities. You want to go to QJO Entity Vault. Let's go there real quick. If you do not have this, if you've ever set up an entity and you're always looking for your paperwork, your wife's like, man, I don't understand all these things. What's going on with where's this? What do we have to do with this company? Where's the information at? Go right here and spell it correctly because I was not, the QJOEntityVault.com. Watch this video. It tells you exactly why it was built. This saves the problems that you will have with passing on your legacy to your family. If you're even remotely worried about how are they going to find all these things I put together for them, that's what you need. Check it out. And with all that, we'll just see what happens today, Tuesday. Another month, going to the very last month of the year. Make it a badass one. Get at it, stay at it, make a plan, execute. We're here to help you. Info@aaronchapman.com.